Good day to everyone. We are group number 9. Today we are going to do financial reporting and disclosure analysis about Richard Pettis Export PLC. In rubber manufacturing and exporting industry, this is the main company. So it listed in Colombo Stock Exchange and their products are latex mattress and other industrial rubber goods. So in this study, we analyze companies' financial standards like LKS 21, 28, SLFRS 3, 10, and broader themes of sustainability reporting and integrated reporting. So our main objective is to evaluate how the company's transparency and compliance evolved in 5 years.
Between 2020 and 2024, Richard Pettis Export PLC consistently disclosed foreign exchange matters under LKS 21. In 2020-2021, the economy met only minimum standards with limited transparency on risks. In 2021-2022, reporting expanded with details, accounting policies and recognition of translation reserves, truth still lacking, sensitivity analysis. In 2022-2023, we saw significant quantitative disclose, including 372 million foreign exchange gain, but qualitative risk discussion remained generic. The following year, 2023-2024, losses of 265 million were reported, again with strong numerical focus but weak head gain strategies. Finally, in 2024-2025, while foreign exchange earnings and some use of forward contracts were disclosed, overall transparency stayed shallow. The key takeaway is that while the company provides strong quantitative disclosures, qualitative analysis of risk management under LKS 21 remains limited. Thank you.
Business combinations are recorded using the acquisition method. The cost includes the consideration paid at non-controlling interest, measured either at fair value or proportionate share of net assets. Acquisition-related costs are expensed. In stage acquisition, prior holdings are remeasured at fair value. Goodwill arises when consideration and non-controlling interest exceeds net assets. If net assets are greater, the surplus is recorded as a gain. Goodwill is later carried at costless impairment and allocated to benefiting cash-generated units or adjusted on disposal.
I will present about SLFRS 10, which deals with consolidated financial statements. For the case study, we selected Richard Pettis Exports PLC, and I will explain how the company applies SLFRS 10 between the years 2022 to 2025. SLFRS 10 defines control as having power over another entity, being exposed to returns and being able to influence those returns. The standard requires a parent to consolidate all subsidiaries, remove intra-group transactions, and present non-controlling interest separately. If control is lost, the assets and liabilities are de-recognized. In Richard Pettis Exports, the consolidated financial statements include the parent company and its subsidiaries. Subsidiaries are consolidated from the debt control is obtained until it ends. Intra-group transactions are fully eliminated for business combinations. The acquisition method is used, and non-controlling interest is measured either at fair value or at the proportionate share. From 2022 to 2025, Richard Pettis Exports PLC applied SLFRS 10 consistently. The company consolidated subsidiaries such as Natural Forms, Microminerals, Apitalian, Compact Salts, and Apico Natural Latex Forms. Non-controlling interest was clearly reported about 1.44 billion in 2024 and 1.19 billion in 2025. Across these years, there were no major changes in subsidiaries, and the consolidation policy remained stable, ensuring transparent group reporting. Thank you.
My topic is LKS 28, Disclosure on Associate and Joint Ventures in Richard Pettis Export PLC from 2020 to 2024. In 2020, the company applied the equity method and disclosure its share of profit and basic financials. The information was enough to meet LKS 28, but it was quite simple with limited details. In 2021, the disclosure became more complete. The company reported ownership percentage, profit share, and even summarized financial statements of the associate. This made the information clearer and more transparent. In 2022, disclosures were the more comprehensive. They include ownership, profit share, revenues, profit, fair value, and contingent liabilities. This gave stakeholders a very strong and full picture of the associate's performance. But in 2023, the equity dropped slightly. The company is still complete with LKS 28, but the information was mainly presented in tables with little explanation about operations or strategy. Finally, in 2024, the disclosure improved again. The company gave more detail on fair values, impairment testing, and adjustments under the equity method. This made the reporting richer and easier to understand than the year before.
Our study focused on Richard Pettis Exports PLC's annual reports from 2020 to 2025, tracking their progression toward modern disclosure standards. Our co-finding reveals a clear, steady 5-year evolution toward integrated reporting. The company consistently moved beyond traditional financial statements to adopt a holistic view of value creation. In 2020, reports were conventional. However, year on year, we saw a clear enhancement. The documents moved simple non-financial highlights to incorporating specific capitals and strong visually enhanced themes such as gearing for growth. This journey culminates in the 2024-2025 report, Resilience in Motion. This final document formally presents a clear capitals model, outlines a structured ESG plan, and explicitly links their strategy to UN Sustainable Development Goals. In conclusion, Richard Pettis has significantly advanced its reporting quality, offering stakeholders a comprehensive view that directly connects operational strategy to long-term success. This is a model for increasing transparency and strategic alignment. Thank you.
Today I talk about evolution of sustainability practices and Richard Pettis Export PLC. In 2020-2021, the company focused in strength governs employee welfare and reducing its carbon footprint through resource efficiency and waste management. By 2021-2022, sustainability expanded to include recycling innovative compliance with new regulation and supporting employees' communities, especially during the COVID-19 crisis. In 2020-2023, the company for media embraced the triple bottom line people, plant and profit, introducing ESG reporting alongside CSR and implementing projects such as water conservation, reforestation and employee development. Moving into 2023-2024, vision depend with stronger environment initiative like energy efficiency alternatives, while social programs such as school supply donation and women's empowerment were introduced. Finally, in 2024-2025, sustainability became more data-driven. ESG reporting matured into a formal forward, highlighting carbon reduction, renewable energy, diversity and inclusion, while CSR focused on meaningful community contribution.
Today I will give a short summary of reporting changes from 2020 to 2024. First, in LKS 21 on foreign changes, there were no local changes until 2024. But in 2024, new global rule on lack of exchangeability was issued. Effectively from 2024, this will be required more details currency disclosure in the future. For SLFRS 10 consolidated statement and LKS 28 on associate and joint venture, there were no changes between 2020 and 2024. Moving to integrated reporting, there were key milestones. The framework was received in 2021. Then in 2022, the Value Reporting Foundation joined the IFRS Foundation. And in 2024, a transition guide was issued to connect integrated reporting with a new ISSD sustainability standard. Finally, sustainability reporting showed the biggest movement in 2023. The new GRI 2021 standard become effective, and the ISSB issued IFRS S1 and S2 general and climate reporting. Sri Lanka announced that these will be effective from 2024 with a fast adopter.
In our review of the Richard Pettis Exports PLC from 2020 to 2025 shows both progress and some gaps. As a positive trend, the company has made strong progress in non-financial reporting. Earlier, it only shows basic CSR activities, but 2024 to 2025, it adapted to the integrated reporting with the clear links to the UN Sustainable Development Goals. Its sustainability reports now follows the triple bottom line approaches, sharing the clear ESG data. This shows the readiness of the new Sri Lanka reporting standards and matches the global best practices. As an weakness, on the other hand, the financial risk reporting is still weak, although the company earns mainly for exports. It does not give enough detail on the foreign currency risk. There is no clear sensitivity analysis or breakdown of exposures. This makes it harder to the investors to judge market risk, especially compared to the international standard like IFRS 7. At last, in short, the company has done very well in the ESG and the integrated reporting, but need to improve financial risk disclosures, especially in the foreign exchange. Fixing this will help to the company to meet global investor expectations. Thank you.
I am going to discuss about the conclusion of our reporting content. LKS 21 Basic Compliance but Enhanced Qualitative Disclosures by 2023 to 2024 Limited Qualitative Risk Insights. SLFRS 3 policy were easily understood with obvious goodwill recognition method, impairment testing approach and stage of acquisition account referring. SLFRS 10 Accounting policy stability strong in accounting policy and treatment of subsidiary non-controlling interests and intergroup elimination. LKS 28 Significant improvement in associate disclosures by 2024 to 2025 with richer financial summaries. Sustainability reporting. Significant shift for feed-based to ESG frameworks legally binding disclosures by 2024 to 2025. Integrated reporting. Gradual adoption with increased ESG or SDG mapping. Now let's identify strengths and weaknesses. Strength, stable accounting policy application across SLFRS standards and notable improvement in associate disclosure and sustainability reporting. Weaknesses. Foreign exchange disclosures remain limited in qualitative and sensitive account analysis aspects, and business combination notes are largely genetic and leak entity-specific insights. So we have come to the end of our presentation. I would like to thank all of listening.